Lesson 13, Harmonic Vibrations. Now this lesson is very dear to my heart, and as you listen to this lesson, you'll understand why. But by the end of this lesson, you will learn that the markets are governed by natural laws. The markets move in natural harmonic beats, entering the market at a 618-786 trend line, and completion of beats can create greater potential for profitability. And you've heard me through all these lessons talk about beats. I'm going to teach you how to create that Fibonacci number trend line harmonic beat convergence trading plan, how to create that plan and trade that plan, and of course where to place your protective stop loss order. Now, we discussed in the previous lessons that many things in our lives vibrate. Sounds, earthquakes, tidal waves, heartbeats, radio and television transmissions, they all vibrate. But what I'm going to teach you about that vibration is going to amaze you. Now, in the last lesson, we learned that as the market vibrates, it vibrates in a natural Fibonacci 618-786 vibration when it forms that pennant. But unbeknownst to me, when I was learning to trade, I didn't know that the markets vibrate in a numerical sequence. And I'm the one that's given it a name of a harmonic beat. And I'll tell you how I came up with this. Years ago, I was trading in the futures market at the Chicago Mercantile Exchange. And I was in a state of frustration, and I was struggling financially. I really didn't know the whys of how the market works, and I wanted to know the whys. Give me the why. I wanted to know why it bounced here and why it bounced there. And what I discovered is my wife and I, we were going through tough times. We're going through tough times financially. We're going through tough times emotionally. Why emotionally? It's because I was so frustrated and my ego was being attacked that I literally, whenever I went to bed, I had literally stacks of charts on the side of my bed, almost as high as my night table, and every single night, instead of talking to my wife, before I went to bed, I'd be studying these charts, I'd be looking at these charts, I'd be trying to figure out a method to all this chaos and madness. And I will never forget this. One night I was sitting in bed, and I saw a pattern. And the pattern was the currency markets at the Chicago Mercantile Exchange, they vibrate in a 27-point increment. 27 points. Well, I remember waking up my wife and I go, "Honey, it's alive." She goes, "What's alive?" I said, "These charts, they're alive. They beat." She says, "What are you talking about?" And I said, "Get up, look at this." Now, this was an amazing discovery for me. It meant nothing to her. It was just more aggravation for her. But for me, what I discovered is the markets beat. And then when I moved over from trading futures to Forex, the first thing I looked for was the harmonic beat. And I found that in the Forex, the market beats in what's called 60 pip increments. 60 pip increments. And a 60 pip increment equals one beat, to where a beat and a half will equal 90 pips. And 2 beats will equal 120 pips. 2.5 beats, 150, 3 beats. Now, what does this mean? That means that as the market moves, it predominantly starts at 0 and will continue in a direction until it hits roughly 60 pips, and then you'll get a pullback. So let's look at this. And you can find these beats on all time frames. If you start at 0.0, a low, and take it to a high. Look at how the market from this low to that high went 2 beats, or 120 pips. Then it created somewhat of a tweezer top, definitely an evening star, and pulled back from that high to that low 60 pips. U-turn, created an engulfing bullish candle, went up a half a beat, and then fell another 60 pips. A, B, C, D. Now, the market then rallied again, 70 pips, or beat and a quarter, and then fell 2 beats, 120 pips. Then rallied back up 90 pips. Now you're probably saying, Chief, what does all this mean? I'm going to get to this because you're going to watch how powerful this is. Look at this chart. This is the Swiss franc. The last chart was also the Swiss franc 60-minute. This is a Swiss franc 4-hour chart. Look at how it starts at this low and goes to this high on a 4-hour chart. Goes straight up 3 beats, 180 pips, 60, 120, 180. Then falls 2 beats, A, B, C. Look at how the C is exactly a 2-beat pullback. Then the D extension is 3.5 beats. Then look at the pullback again, 2 beats. Then the D extension is 5.5 beats. Then, of course, the pullback, 90 pips down, followed by a rally of roughly 1 beat back up, then a pullback of 2 beats down, then a beat and a half back up. Now, this was an amazing discovery for me because I started to see a pattern, and the pattern is the following. Whenever an A and a B are complete, the first thing I do is spread my Fibonacci's. Then I say, if the market pulls back to a 786 or 618, how many pips are there from that high to the 618? And if it is 60 pips, 90 pips, 120 pips, or the completion of a beat, or beat and a half, or 2 beats, that's where the next bounce will probably be. Therefore, all I'm doing is continuing my building of a case. Now, most markets move in beats. Do you realize if you're trading gold, it has $17 moves in its bounces? The currency market has 27 pip moves. The Dow 30-minute charts move in 70-point moves. T-bonds, they'll move in 20-point moves. The S&P 500 will move in 540-point moves. Soybeans, from a low to a high, will move in 18-cent increments. And wheat, it'll move between 11 and 17-cent increments. Now let's see if you can find the harmonic beats on this chart, on these charts. Now, here's the rules for finding the harmonic beats. The first thing you want to do is start at the bottom left-hand corner of the chart, start at a low, depending on the direction you're going, low or high, and then start to move forward. An upbeat will form at a low to a high, a downbeat will form at a high to a low. Now, here's the following example. Here's a low. Let's start here. You could have started over here, but let's just start here. Count the pips over here to your right. How many pips is it from here to here? Or maybe even from here to here with a pullback to here and then going up. You start counting the beats. Put this on pause. And I really want you to put this on pause for a long period of time to where you can really study this. Here's what it looks like. From that low to that high, 120 pips. From that high to this low, 60 pips. From that low to that high, 30 pips. From that high to that low, 60 pips. From that low to that high, 70 pips. From that high to this low, 120 pips. Are you starting to see a pattern? I mean, this is amazing to me. Now, find the beats on this chart. Go ahead and put the machine on pause, but let's start here. Count from here to here, then from there to there, then from there to there, then from there to there, then from there, all the way up to these tweezer tops. Hello, I'm reversing and coming back down. Gotta love how this market communicates. Count your beats. This is what it looks like. Look at this. 3 beats up, 2 beats back down. 3.5 beats up, 2 beats back down. 5.5 beats up, 1.5 beats down, followed by 1 beat back up, followed by another 2 beats down, followed by 90 pips up. What does all this mean? Now, think for a second. If we're in an uptrend, the retracements are going to have smaller beats than the CD extensions. The CD extensions should be more beats than the retracement. And how this is going to work is when you spread your Fibonacci's, and let's just say we spread our Fibonacci's from this low to that high, and the market retraces back to this 618, gives us an engulfing bullish candle, and you count from this low to the D extension high, and you can count way ahead of time. If you find a match, meaning from this low to the level of the high is exactly 120 pips, that's where you can count on the next pullback. And since we're in an uptrend, look at, if we were drawing counter downward trend lines, look at all this money. Counter downward trend lines, look at all this money. Come on. I mean, trading needs to be simple. It shouldn't be hard. Are you starting to get the picture? Now, can you find the beats on this chart? I used uptrends before. Let's see if you can do it on these downtrends. Put your machine on pause and start counting your harmonic beats. Here you go. 60 pips up, 60 pips down. 30 pips up, 30 pips back down, 30 pips back up. Then all of a sudden, 180 pips down. Now what happened here? Obviously a fundamental announcement. What was this? A descending pennant. See that descending pennant? Now think about this. On non-fundamental announcement days, the market creates upper bell curves, which is about a 60 pip rally with a 60 pip return, or lower bell curves, depending on the session. And on fundamental announcement days, the market has a tendency to move anywhere from 90 pips to about 120 pips in a direction, creating a trending day. Look at, these are beats, 3 beats on a fundamental announcement day. Then non-fundamental announcement session, upper bell curve, lower bell curve, okay? Upper bell curve, lower bell curve. Are you starting to get the picture of how all this works? Now, how does a trader apply the knowledge of the harmonic beats? The first thing we're constantly looking for as we trade is a level of convergence, a reason, an educated reason why the market should bounce there. The termination of beats or a beat can create a turning point. and participate in the convergence with a trend line and a Fibonacci number. Example, if the market moves in beats, which it does, and we are looking to enter the market at a 618 retracement level, count the pips from the start of the retracement, which would be your B high, all the way back down to your 618, and see if it completes a beat or beat and a half or 2 beats. Look for a convergence there, a trend line, a level of past resistance becoming future support if you're in an uptrend, or vice versa, or even perhaps the D extension of a Gartley. Now here's the AB. Look at how the market rallied up to the 5-0, bounce, pull back down, then pull back up and hit the 618. Now let's count our beats. Look at this. Fell 180 pips. Obviously a fundamental announcement day. Retraced back 76 pips or beat and a quarter. Fell, created that Gartley, gave us an engulfing bullish candle, and rallied up to the 618. From this low to this high was 90 pips. But from this low to the 618 was exactly close to 120 pips, which is from here to here, 2 beats. Okay? A, B fell 180 pips, retraced back 120 pips, and then begin to fall another 120 pips, working its way to D. Now, how to apply when trading harmonic beats? Or here's the rules to apply. Find and draw your trend lines, in or up or outer, just like you do every time you turn on a chart. This will help you determine whether you're in an uptrend, downtrend. Use your Fibonacci tool on your software to draw your Fibonacci lines in the direction of the trend to look for the retracement level as well as the de-extension level. Look for the latest price swing. If you're in an uptrend, you're going to be looking for an up price swing. If you're in a downtrend, you're going to be looking for a down price swing. Now, if you are in an uptrend and you've spread your Fibonacci's from A to B, count from the B high how many pips it is to a 618 or 786. Also look to see how many pips is it from the B high to past resistance. That may give you a heads up too. Or count how many pips it is from the B high back down to the trend line. Now, if it is exactly 60 pips to the trend line, bingo. That's probably where your Morningstar, tweezer bottom, or engulfing bullish candle is going to be. If your trend is down, then go ahead and count your pips from the high to the low. Don't forget to draw that counter downward trend line. Spread your Fibonacci's. Count how many pips it is from here to the 618. From this low to this high is exactly 120 pips. Bingo. The fact that it is 2 beats from the low to the high gives me heads up that that's probably where the U-turn is going to be. Now, I don't have any help here on this chart of having past support enabling me to say, hey, here's where future resistance is going to be. But if I start to count my beats, 3 beats down, followed by from the low to the high up to the 5-0, 76 pips, then a pullback, 30 pips, then a rally back up to complete from this low to that high, 120 pips. And from this turnaround, see, when this engulfing bullish candle appeared, the first thing I want to do is count from this low to the 618. That's 90 pips, a beat and a half. There's a high probability chance this market's now going to bounce at a downward trend line, 618, completion of 2 beats. Traders, I'm telling you, it just doesn't get any better than this. I will never forget September 11th. I was trading that day, and all of a sudden, a friend called me and said, "Turn on your TV." I turned on the TV and I saw the World Trade Center. Then, shortly after, I looked at the charts because I was trading euro that day and Swiss franc that day. And I looked at the charts, and all of a sudden, on the Swiss, I had broken an upper trend line, or the market had broken an upper trend line. Now, what amazed me is when the market entered into the sell zone, and I was in a state of shock over the trade center falling down. I will never, ever forget that. The market had just moved 3 beats up on Swiss, pulled back a beat and a half. I was busy counting beats, created the morning star, was rallying back up, went up another beat and a half, and then U-turn and fell like a rock. Do you realize that it fell 9 beats straight down before it formed this morning star? Look at, through all this fall, what I was waiting for is, holy smoke, this thing's going to fall until it creates a signal. Now, here the world's in mad chaos. The World Trade Center's coming down. Do you think the charts know that? Do you really believe there's some sort of conspiracy where somebody's dictating how this works? All of a sudden, completes 9 beats from there to there, comes to a screeching halt, forms a morning star. Look at this morning star there. Then rallies back up to a 382. From that high to this low, that's a 382. Forms an engulfing bearish, goes 4 beats back up, falls down 3.5 beats. At 3.5 beats, creates an engulfing bullish. You can see it right behind here. From this low to that high, goes exactly 5 beats up. Do you realize at the end of 5 beats, that's where past support was, and that's where future resistance is? But it goes 5 beats up. Look at, and forms an engulfing bearish candle and then calms down. From that high to this low, that's the 618. This is a Gartley, an up A, B, C, D, inside a down A, B, and then it moved in harmonic beats. The most amazing thing I've ever seen in my life. I got to tell you, even when there's chaos in the world, the markets must stay in balance. Isn't this amazing? This is amazing. Look at here, the JPY. The JPY was in an uptrend. Okay, you know what? The planes hit. Look at this. For some reason, nobody let the planes hit until the market completed its 4 beats. Then the market hit, or the planes hit the World Trade Center, and it fell 6 beats straight down. Pulled back up 2.5 beats, fell back down 2 beats down. Nice tweezer bottoms here at the low, rallies back up 1.5 beats, and then finally starts to go sideways. Starts to pennant. Now, if this doesn't make a believer out of you, man, you better not trade. That's all I got to say. I wouldn't even waste my time trading. Look at the GBP. GBP on September 11th, all of a sudden takes off, okay? Breaks the downtrend line, crowns. We were doing down A, B, C, D, A, B, C, D. Market's making lower lows and lower highs. All of a sudden, it breaks the downward trend line, crowns 1, breaks the downward trend line. 2 comes up to resistance. 3, find the left tip of the crown. 4, pulls back to the right tip of the crown, creates a beautiful morning star right here, and then just takes off like a rocket. 4 beats. At the end of the 4 beats, forms an evening star. Look at it right here. 1, 2, 3. There's your evening star. Goes up and tests that evening star. Fails because it creates an engulfing bearish candle. Falls down to past resistance, becomes future support, creates an engulfing bullish candle, comes up, tests that evening star one more time, creates an engulfing bearish candle. Look at this. But works in harmonic beats. 1.5 beats down, 1.5 beats back up, 2.5 beats back down, 1.5 beats back up. Yet at the same time, as it fell, engulfing bullish candle, followed by a retracement of a test of the engulfing bullish candle, then rallies. These charts say it all to me. Here's the euro. Look at the euro. Rallies. This is so amazing to me, that the fact that this was taking place on September 11th. The euro rallies up, okay? Goes exactly 4 beats up, creates an engulfing bearish candle where it's saying, hello, trader, I'm not going anymore. Pulls back down, okay, to a 5-0, almost past resistance, becomes future support, creates a huge engulfing bullish candle, pulls back up, forming that Gartley, A, B, C, D, a down A, B, C, D, in an up A, B. Do you see it? That's your Gartley. Then forms a beautiful morning star. Look at the morning star right here, and pulls back up. But in its movements, it worked all in beats. 4 beats up, 2 beats down. 1.5 beat up, 2.5 beats down, followed by 1.5 beat up, and went sideways. In the 24-hour period, while there was chaos in the world, the market moved in harmonic beats. There is no denying that this is how all this works. Now, did this lesson teach you that the markets are governed by natural laws, that the markets move in a natural harmonic beat, that entering the market at a 618 or 786 trend line and completion of beats can create a greater potential for profitability? How to create a Fibonacci number trend line harmonic beat convergence trading plan, how to create a trading plan and trade your plan, where to place your protective stop loss orders and financially protect yourself in every trade. If it didn't, then you need to play it again. And if it did, play it again anyway. On behalf of everybody here at Market Traders Institute, we'd like to say thank you for educating yourself about how the market works. This is FX Chief.